Mr. Bernanke, if you don't mind, would you tell me whether or not you do your own shopping at the grocery store?
Yes, I do.
Okay, so you're aware of the prices. But this argument that the prices are going up about 2%, nobody believes it. And the old CPI says prices are going up at 9%, so they believe this. And people on fixed incomes, they're really hurting. The middle class is really hurting because their inflation rate is very much higher than the government tries to tell them. And that's why they lose trust in government. You took over the Fed in 2006. I have a silver ounce here. And this ounce of silver back in 2006 would buy over 4 gallons of gasoline. Today it'll buy almost 11 gallons of gasoline. That's preservation of value, and that's what the market has always said should be money. Money comes into effect in a natural way, not in an edict, not by fiat, by governments declaring it is money. As much as I would like to do something with the Fed, I say the Fed's going to self-destruct eventually anyway when the money's gone. But why wouldn't we legalize competing currencies? Why couldn't people put this in a mattress and get 4 or 5 times much of the value in a few years? So the record of what you've done in the last 6 years is destroy the value of real money.
First of all, good to see you again, Congressman Paul. Just one word on the inflation. Of course, those numbers are constructed by the Bureau of Labor Statistics, not by the Fed. They're independently constructed, and I think they're done in a very serious and thoughtful way. On alternative currencies, nobody prevents you from holding silver or gold if you want to. It's perfectly legal to do that. And it's also perfectly fine to hold other currencies, euros or yen or whatever else. So in that respect, you can do that. And I'd be happy to talk to you about
But Mr. Chairman, that's not money. I mean, when you pay taxes to buy a coin or you have capital gains tax, if you have to settle a lawsuit, it's always settled in depreciating Federal Reserve notes. It's never settled in the real contract. So that's nothing near money. The Federal Reserve is given a responsibility to protect the value of the dollar. That's what stable prices are all about. We don't even have a definition of a dollar. We ask about the definition of a dollar and I say, oh, it's whatever it's by. Well, every single day it buys less than the next day. And to me, it's sort of like building an economy and having economic planning like a builder had a yardstick that changed its value every single day. I mean, just think of the kind of a building we have. I guess over the last 30 or 40 years, I have criticized the Fed on occasion. But the Congress deserves some criticism, too. The Federal Reserve is a creature of the Congress. And if we don't know what the Fed is doing, we have the authority, and we certainly have the authority to pursue a lot more oversight, which I would like to see. So although the Fed is on the receiving end, and I think rightfully so when you look at the record, I mean, the Fed's been around for 99 years, almost a few years before you took it over. And 99%, 98% of the dollar value is gone from the 1913 dollar. So that's not really a very good record. And I think what we're witnessing today is the end stages of a grand experiment. We have a debt-based system. The more debt we have and the more debt the Federal Reserve buys, the more currency they can print. And they monetize this debt. And no wonder we're in a debt crisis. It's worldwide. I think it's something we've never experienced before. And I think the conclusion will be a vindication either for sound money, or if you win the argument and say, yes, we are great managers, we know how to do it, we want the credit for the good times, and we want the credit for getting us out of those good times. I mean, I think within a few years, we're going to know. Of course, I'm betting that the market is smarter, commodity money is smarter. Nobody's smart enough to have central economic planning. So I'm anxiously waiting for this day for the conclusion because reforms have to come.
Dr. Paul and Chairman Bernanke, you're getting along so marvelously.
Just a fierce and fantastic debate between two people in American history during a time that was tumultuous and talking about, events of the day. But all I got to say here, guys, is history repeats itself. If you look back into history, lead ups to world wars, what was going on with money supply and what was going on economically, and what certain countries were doing to other countries in the lead up to these conflicts. All I can say is some of the events of today sound and look eerily similar to some of the events in history. And when you look at this conversation in a microcosm, it would be hard to tell with just audio if that was happening in 2011 or if that was happening in 2023. The same sort of argument could be applied by both sides there. But an excellent, highlight of how Congress and the Fed were interacting with each other in under oath in a very formal setting. The other noticeable thing there is, and I know the Fed is not politics. I know Bernanke is not a politician, but just the fact that they were able to, even though be very sharp in their opinions and be very direct with each other, they still found the sort of common ground of humor and the ability to joke with each other, and remain human. And I think that that's missing in much of today's politics. My country is pretty toxic here in Canada between the opposition leader and the current leader. And you look at the Republicans and Democrats in the US. I'm not as up to speed in the UK, but they've had a bit of a tumultuous ride over the last few years with their transitions in leadership. It's just interesting to see how all the characters, again, in history interact with each other. And I do notice that, it's deteriorated today. Today's leaders and policymakers and thought leaders, they don't communicate like that with each other. They just fire stones and look for the best gotcha thing that they can get, and the 5 minutes of fame on whatever newscast of the night just to get their news out. But and I can't say that they solved any problems back then with their sort of agreeable position on each other. However, the story's the same. Whether it's 2011 or 2023, we've got the same conversations going on. But that was a really fierce conversation between Ron Paul and Ben Bernanke in 2011, talking about money supply, talking about gold and silver, and where the value is, and what's the opinions of the day. So guys, I hope you appreciate this episode. This has been another episode of Bullion Breakdown. You can feel free to watch more on the channel. If you want to, you can hit like, subscribe. You can share these videos with friends. That really, really helps the algorithms. And by all means, I'll be back soon with more. Until then, stay awesome.